Well, good morning, Southern Oregon. Alice Lema here, broker John L. Scott with my good buddy Pete Belcastro, principal broker John L. Scott. We're here just to talk about what's going on with real estate in Southern Oregon on the Real Estate Show. So Pete, here we are. It's summer officially. We're still coming out of the corona. How are things going in your real estate world?
Well, it's so funny because you're right. Summer has started. There's more people floating around the valley now. Tourism has come back a little bit, but still nothing like we've seen in past. And yet real estate somehow just keeps going, Alice. Supply and demand is playing a big role in what we've seen with inventory levels, certain places, and demand at certain levels. And there's just still a lot of steady activity going on in the real estate market. And so, from my perspective, people are looking. You're seeing, as you are, you're seeing some multiple offers in certain areas. So yeah, I guess we're saying we went from kind of the winter market before COVID was going, to the summer market, and here we are.
Yeah, it's all been very fits and starts. But Southern Oregon is an absolutely beautiful place to live, and now other parts of the country are finding that out and bringing their jobs with them. So it may change the face and the dynamics here in our little valley, but it's also nice that housing looks like it might be leading us out of this little slump.
Well, the reason it is, and I think that we don't maybe even emphasize it enough, is that I think this week at our John L. Scott office meeting, for example, we heard interest rates for 30-year fixes now are below 3%. So, as long as that's out there, it's driving so much of this real estate market, because people are going to be able to get more than they would have normally maybe gotten if interest rates were 4% or whatever. So it's just kind of the fuel that drives it. And as long as they stay low, Alice, I don't know what anybody else thinks. I think they're going to stay exactly where they are. I think we're going to have that kind of activity go on for a while.
Well, and the feds do what the feds want, but that's what everybody's predicting, that it's going to be pretty good pickings interest rate wise.
Well, today, Glenn Cunningham, who's a CPA and financial planner, at Nagel and Padilla in Ashland, he's my CPA and has been my CPA for a long time, and also a fellow Ashland Rotarian. And Glenn joins us the last kind of day of the fiscal year for, I don't know how many, 5, 6, 7 years he's been with us. And so today, I can't wait to hear him, because can you think of any other industry that has been so impacted by their world around them and from the outside as the financial industry, tax returns and things like that? How is COVID going to play into our tax returns and investing and buyers and sellers?
Well, and it's also new. I don't know that anybody's really thought about it. So it's wonderful to have Glenn Cunningham on the show today so that we can be prepared.
But you have not thought of that, huh?
Well, I didn't take any PPL and stuff like that. I'm on a cash basis since the crash. There's still some dinosaurs like me out there. But
yeah, even so, filing returns. I mean, just think how it's changed and what you're going to have to claim or not claim and all these kind of things, and how it affects real estate is also part of the reason why we love having Glenn here to tell us all about this.
Yeah, so we'll be back right after these messages. Don't go away. Alice Lema, Pete Belcastro, John L. Scott, Southern Oregon, here with the Real Estate Show, and we'll be interviewing Glenn Cunningham, CPA and financial planner today, so don't touch that dial. Well, welcome back to the Real Estate Show, folks. I'm Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott, Southern Oregon, here on the radio show, talking about all things real estate in Southern Oregon. And today we are super excited to be interviewing Mr. Glenn Cunningham, CPA and financial planner, Nagel and Padilla, LLC out of Ashland. And it's incredibly poignant because of all the tax ramifications of what's happened with the corona, as well as some of the other situations that had happened with our government before the corona. So welcome, Glenn. Thank you so much for joining us.
Thank you, Alice and Pete. It's great to be here again. And I'd like to spend our time today talking primarily about things that are tax related, that affect the real estate market, mortgage holders, tenants, landlords. But before we begin with that focus on real estate, there's a big event coming up on July 15th. And most taxpayers don't think about July 15th as being a big event. What
And that is, okay, yeah, what is the event? Okay.
Okay, well, I'll tell you. Because of the pandemic, several major deadlines have been moved to July 15th. The payment of federal taxes for 2019 are due on July 15th. The first quarter and second quarter 2020 estimated tax payments are due on July 15th to the IRS.
Both of them? Both quarters are due?
Both quarters, both quarter one and quarter two. Back in the old world, pre-pandemic, the first quarter payment was due in April. The second quarter payment was due in July. This is only to the IRS, but now you have 3 tax payments due to the IRS in July of this year. If you're self-employed, that's going to be a significant amount of money. You have an opportunity to extend your tax return from July 15th to October 15th to file your tax return, but you can't get an extension to pay your IRS taxes for 2019 and the first quarter and the second quarter past July 15th, 2020.
Oh, well, my goodness. That is news. Don't you think, Pete?
Alice, weren't you talking about the cash thing that you were up to there? See, that's coming to you, isn't it? That's right there. There you go.
So that is bad news for a lot of people because everyone was really excited about the delay. And I'm sure many taxpayers were really excited about the fact that they could use that money for other purposes. Well, it's time, unfortunately, for the bill to be due. Oregon is different. The Oregon 2019 tax payment is due July 15th, but your first quarter and second quarter estimated tax payments were due to Oregon in April and June. So everybody needs to buckle down and think about what their payments are going to be in the next 20 days or so.
Yeah.
I wonder how many people missed the state of Oregon deadline because they thought it had been extended as well.
Yeah, Oregon really confused taxpayers by not coordinating their payment dates for 2020 with the IRS. What I've heard was that the legislature would have needed to get involved and the Department of Revenue didn't have the authority to adjust those dates. So yeah, there's going to be quite a bit of pain on or about July 15th. And if you miss the payments or don't make the payments, there may be estimated tax payment penalties for paying late.
Yeah.
The next topic that I wanted to talk about is also related to 2020. Many of the people who are listening to this show, if they're realtors, they probably applied for and received a payment from the Paycheck Protection Program. And the Paycheck Protection Program was to help both self-employed and employers meet their payroll obligations. The PPP fund could be a fully forgivable loan if you meet certain criteria. There is also the EIDL program, EIDL. It stands for Economic Injury Disaster Loan Program, and there are 2 components of that. There's up to a $10,000 forgivable grant, and then there's a loan. The PPP loan is a 5-year loan at 1% interest. The EIDL loan is a 30-year loan at 3.75% interest.
Wow. Did you know that, Pete?
I did know that. And well, in my little world, we receive PPP money for our restaurant, you know, Alice, and I know other people who've gotten, you know, lots of money. Glenn, my question is here, did a lot of people do this? And a lot of people in the Valley took advantage of these, didn't they? And now they're having to make sure that they take care of it and do what it says, right?
Well, that's one piece of it, Pete. I absolutely want to get to that. But there are a couple of important considerations. The first one is if you're eligible to file for a PPP and have not done so, I encourage taxpayers to consider doing that because the funding window closes on June 30th.
Right.
So if you think you're eligible for a PPP, You don't go to the Small Business Administration, the SBA, to get a PPP. You have to go to your bank. And you probably have to go to several banks because many banks are only working with their own current customers. So if you haven't applied, you should consider applying if you're eligible.
But also, I just want to point out some of the larger banks, like the international franchises, are not even working very well with their own customers.
Yes, I agree with you, Alice. And
We won't name names.
Yeah, that is unfortunate. I won't name names either, but my firm will be changing our banking relationship because we could not get a loan
Me too.
from our banker.
Me too.
We got a loan from another banker and we're moving all of our business there.
So are you going local?
I am, to People's
me too.
Bank of Commerce. We're very, very happy. So that name I will name because People's Bank did a great job with us. We were very excited about the way that they worked with us. But the PPP, so you have to go to your banker. The EIDL, and that ends on June 30th, when the opportunity to apply for a loan. The EIDL was closed almost from mid-April until about a week ago. And the EIDL was just reopened. And while but when Pete spoke at the first segment, he mentioned that real estate loans were below 3%. So a 3.75% loan may not be that exciting for many borrowers. But if you have current obligations and don't have time to refinance, you might consider applying for one of these EIDL loans because it has a 30-year window for payoff.
Wow, yeah.
But in terms of tax, what I wanted to talk about is while the PPP is fully forgivable if you meet all of the criteria, and the EIDL grant, which is up to $10,000, is fully forgivable, expenses paid by those funds are not deductible. So let me give you an example. Let's say you own a restaurant and you got a $50,000 PPP loan, and you're using that loan to pay your workers. Well, in the past, you would have been able to deduct that $50,000 in wages for your workers from your income.
Okay.
You can't.
Really?
Because you paid those expenses with tax-free funds. So while the PPP funds are not taxable, there are going to be downstream tax consequences when taxpayers file their 2020 tax returns. In the example that I just gave you, that taxpayer's taxable income would be $50,000 higher than it otherwise would be because you used $50,000 of PPP funds to pay your workers.
Wow. Well, I didn't know that part of it either.
So
Yeah,
how do you find out if you should either get funded and use that money, because you need to run the numbers right now, because your deduction might be more valuable than the PPL.
But I don't think that it will be, Alice. Let me give you an example. Let's say your combined federal and state tax rate is 30%. In the case of that person that we were talking about, that restaurant owner that got a $50,000 PPP loan, their tax liability on that might be $30,000 or so. Up to $30,000 between state and local taxes. That's a lot less than getting $50,000. So you have to balance, and I suggest that your listeners work with their tax professionals and their accountants on whether or not this makes sense for them. They shouldn't make any decisions without being fully informed, but they should work with professionals. And it's very easy to apply for a PPP. So many people have done it on their own, and I only find out from my clients that they applied when in conversation with them at this point. I'm going to be asking them proactively in the future, but I'm only finding out anecdotally. So many people have done it on their own. The challenge is when you do apply for forgiveness, the forgiveness application instructions are 11 pages long, and it's quite complex.
Wow.
So don't do this without professional advice because you want to fully understand what the impact is, both positive and negative.
Yeah. No, that's fascinating. It's a really interesting thing. Let me ask you just, what's your advice for, we've heard so much, Glenn, about mortgage relief and release of mortgage obligations during this time. What's your advice to to people about that right now? Because I don't know what to tell people.
Well, mortgage relief is available, and mortgage relief is available in many fronts. If you have a federally backed mortgage under the CARES Act, borrowers can request forbearance on loan payments from their lender. If it's a single family home, you can request payment forbearance for up to a year. You have to get it in increments of 180 days at a time. But if you're having trouble making your mortgage payments, you should reach out to your lender. If it's federally backed, that mortgage, you may be able to get relief on making payments. The same thing for multifamily homes, although the windows are shorter for multifamily homes, you can ask for forbearance. Now, forbearance is not forgiveness.
Right, it's not.
Right, forbearance means that there may be a balloon payment when the forbearance period is over, but you should talk to your bank and ask them what the downstream consequences are. If the payments aren't due immediately, you may be able to pay it at the end of the loan. So it may add a balloon payment at the end of the loan, or you may have to increase your payments for a certain period of time to make that up. So,
or you're going to even get a second loan added to it for what you owe for the forbearance time. So you're right. People do have to check. Are you hearing clients who have done this? Are you hearing people who are doing this?
Yes, I am. And you have to be careful for instance, if you own commercial real estate and you applied for an EIDL loan, the purpose of the EIDL loan is that you suffered economic distress and you are using those funds to pay obligations that you wouldn't otherwise have the cash to do. So you can't double dip and get an EIDL loan and use it to pay down your credit cards. If you get an EIDL loan and you have a mortgage, you need to use the EIDL loan proceeds to pay your regular obligations.
Well, and that's a good differentiation. We've got a quick break coming up here. We're talking to Glenn Cunningham, CPA and Financial Planner with Nagel and Padilla, LLC out of Ashland. Interesting stuff. And Pete Belcastro and I will be right back, so don't go away. Well, welcome back, real estate fans. Alice Lema here with Pete Belcastro. We're both brokers at John L. Scott, Southern Oregon, here on the Real Estate Show. And we're talking to Glenn Cunningham, CPA and Financial Planner of Nagel and Padilla, LLC. And what an interesting conversation. If you'd like to check out more interesting conversations, we have 11 years, folks, 11 years of real estate shows on YouTube. Just Google realestateshoworegon.com, and we have lots and lots of great information, great interviews. So just getting back to Glenn Cunningham here from Nagel and Padilla, LLC, we were just talking about some of the side effects of the PPL and stimulus, and you had another point you wanted to make.
Yes, thank you, Alice. Many of your listeners have probably forgotten about the stimulus checks that were mailed starting in early April. I think most of the stimulus checks, the initial batch of stimulus checks, are already out. Well, don't forget that you got that. If you did get a stimulus payment, don't forget that you got that stimulus payment, because you're going to need to report on that stimulus payment with your 2020 tax return. It's highly unlikely that the stimulus payment will need to be paid back, but in fact, you do need to reconcile what you received against what you were eligible to receive based on your 2018 and 2019 income. So be sure to tell your tax preparer that you got a stimulus payment. And there's a really good reason why. If you got less than the $1,200 per taxpayer, $500 for dependents under 17 payment, and were eligible to get $1,200 per taxpayer and $500 per dependent, you may get that money with the filing of your 2020 return. So it makes sense not to forget it, and it makes sense to tell your tax preparer, because you might get some more money.
Well, that's good news. How often does that happen?
It doesn't happen very often, and the rules have not been written yet. We haven't seen anything about how this is going to be implemented. This is just what the Congress's intentions were when the legislation was passed. I also wanted to talk, if I may, about unemployment. If any of your listeners, and I have a feeling quite a few of them, are either workers who've been laid off or unemployed people or self-employed people whose income from self-employment was reduced, it's highly likely that they were eligible for either increased federal unemployment or state level unemployment that was made available to self-employed people. The self-employed unemployment program, we have to throw another acronym out there, is the Pandemic Unemployment Assistance Program, PUA.
PUA.
Yeah, lovely acronym. That program can benefit unemployed, self-employed, formerly self-employed, or self-employed people with reduced income, but they have to be very, very aggressive about pursuing it because it's new and the unemployment department is overwhelmed with requests. But really what I wanted to go with this was it's very important, and many people who've taken unemployment in the past forget this. I think it's selective memory, but unemployment compensation is subject to income tax. It's subject.
Unemployment benefits are taxable?
Yes, ma'am.
Sure.
Federal and state.
So what you're saying, okay, so Glenn, so what you're saying then is that all these programs that people have taken advantage of and have gotten in the mail, and I know people who've gotten, large families got like $4,000 or $5,000 in some of that money, and then you've got unemployment money, the $600 a week that people have been getting plus their unemployment and everything. All of that you're saying is taxable, correct? Because it's not being taken out when you receive your $600 check.
Well, your stimulus payment will not be taxable. You just need to reconcile it when you file your 2020 tax return. So that's not taxable, and you shouldn't have to pay that back even if the government got the information incorrectly. But those rules have not been finalized. Unemployment, however, all forms of unemployment, whether it's the extra $600, the regular unemployment for workers who have employers or work for employers, or the self-employed, is subject to federal and state income tax. And
aren't those taken out though before the checks come?
Only if you tell them to.
Oh, okay.
Oh, who would know that? Who would know to do that? That's kind of sneaky and unfair.
Well, it is both of those things. You're right. However, it's important, many people think that Social Security should be free of income tax. And unfortunately, it's not. It's subject to income tax. So if there's something I learned when I went to business school, and that's the TANSTAFL principle. And I've talked to Pete about this quite a bit. TANSTAFL stands for there ain't no such thing as a free lunch. So if you think something is TANSTAFL, you should ask questions. And ignorance, unfortunately, is not a good defense. And we're having the conversation now. The additional $600 in unemployment ends in July, and there may be programs like that continue, but taxpayers still have time to evaluate both the compensation they've received as well as the unemployment, and can make estimated tax payments if they need to.
Well, so everybody's feeling really good right now, and now we're going to have all these bills coming due this summer.
Well, nobody likes surprises, Alice, and the worst thing that's going to happen, I think, is a taxpayer is going to file an extension for their 2020 tax return, which means they won't file their tax return until close to October 15th, 2021. So we're talking here today on June 24th, 2020. The tax is due on April 15th for 2020 in 2021. However, the government wants that money regularly, and they want it at least quarterly. So use this as, what did Obama used to call these things? Teachable moments. Use this as a teachable moment and take stock on what you have gotten and where it's come from and what you've paid in, and work with your tax professional to figure out if you should be setting money aside. The government isn't going to throw you in jail for not making these payments, but your listeners are going to be really disappointed if they have a huge surprise next April or next October.
So Alice, all the people that are out there telling you, gee, I'm making more on unemployment than I was working, they're not looking at that tax liability that they're going to have to eventually pay, because that's going to come due as well, right? That makes sense, because I hear that all the time from people. That's a great deal. What a great deal.
Now we know how to ruin their day.
No free lunch, Alice, and he's right. That's absolutely true.
Thank you, Pete. That's really nice of you to say. And I hate being the bearer of bad news. And as Pete knows, I'm unfortunately generally the bearer of bad news. But there's a lot of opportunity here. We've talked about the potential, and I hate the term, but it really is relevant, for some free money. If you apply for a PPP, and you still have time to do that, and you use the funds appropriately, that money could be virtually free on receipt, and you may have to pay some tax in the future if you use it to offset, business expenses. The EIDL grant is $10,000, and that could be fully forgivable. And the loan is a 30-year loan, and it's a pretty quick process through the SBA. I've worked with clients who applied for the EIDL program, and they've received their money within a couple of weeks of getting the loan approved, and it didn't take very long.
Can you say the initials again for the EIDL program? We have a break coming up, and I just want to make sure people know what we're talking about, because it's different from the PPL.
Yeah, EIDL is Economic Injury Disaster Loan Program, and it's a program from the SBA. So if you Google EIDL, you should get to a page at the SBA, and you can begin the application process on the SBA website. You don't have to interface with a bank. You can work directly with the SBA.
And I did get an EIDL loan myself.
That's great.
I got it. I went right early on, and it's you deal directly with the SBA. They didn't need a whole lot of information, from you. You just have to show them that you're a taxpayer. Actually, you have to show them that you have a business or something, that you've got something that validates that loan. So anyway, it was interesting.
Yeah, well, Pete, I know you own, rental real estate, and I think that the EIDL program is ideally suited to help owners of rental real estate, especially commercial rental real estate. If you have a retailer who is forced to close or has, had to shut down their business, the EIDL loans can help you stay current on your bank lending. That's
exactly what happened to me there. Let me ask you another question, since you brought it up about tenants and landlords in this pandemic. I know we got a break coming up, but that's still a big thing out there, that we've got a lot of people are renters and landlords, and how are they dealing with this?
Yeah, so that's challenging. And unfortunately, from a landlord's perspective, there has to be a lot of willingness to be forgiving. Between the governor's executive orders on with temporary moratoriums on residential and commercial evictions, the landlord's hands are tied and may have to take care of paying their own obligations until such time as their tenants can get out of the economic problems that they could have. But if your tenant is an individual or a family that's renting a primary residence, not a business, there is a rent relief program from the Oregon Housing and Community Services Department. And if you have to make your rent payments, you can consider reaching out to your internet utility, your utilities, your other utilities, your phone company, because many of them are waiving service disconnections and late fees to help people make their other obligations. So don't stop at the rent. Look at all of your housing costs, look at all of your business costs, and reach out to the people that you owe money to and try to work with them directly, or consider going to the Housing and Community Services Department for rent relief.
Well, and isn't that the communication? That's what everybody's been saying about the landlord-tenant situation is no matter what side you're on, to keep in communication.
Absolutely, Alice. Don't just not send the check. If you're not going to send the check, start the conversation. It's hard to do, but you really need to start the conversation.
And landlords can be proactive in that, you know, landlords can reach out and be the first person to say, hey, are you guys okay? What's going on? Are you going to pay your rent? There's nothing wrong with that.
Yeah, from personal experience with some of my clients, I've had clients who've reached out to their landlords. Landlord never responds. Landlord stonewalls. Landlord says no. And, a little bit of graciousness goes a long way. Everybody's under a tremendous amount of pressure. And, if you have a 5-year commercial lease with an option to renew, you don't want to piss the landlord or the tenant
right.
off.
So we've got a break coming up. Hold that thought. Do not touch that dial. Interesting stuff on the Real Estate Show. Pete Belcastro, Alice Lema, Glenn Cunningham. We'll be right back. Well, welcome back to the Real Estate Show. I'm Alice Lema here with Pete Belcastro. We're both real estate brokers at John L. Scott here in Southern Oregon. And we love every Saturday at 10 a.m. talking to you folks about all things real estate in Southern Oregon. We also have a repeat broadcast on Sunday at 6 p.m. This is all on KCMX News Talk Radio, 880 a.m. So check us out. You can also check out our website, therealestateshoworegon.com. So getting back to Glenn Cunningham, CPA and Financial Planner, Nagel and Padilla, LLC in Ashland. And he's given us quite a lot to chew on, things we did not know about the pandemic relief funds that have been given out, and also unemployment. So Glenn, we had to interrupt you right before the break. What were you going to talk about?
Alice, I'd really like to focus on unemployment benefits for self-employed people. Most wage earners understand the concept of unemployment and understand what unemployment benefits are available to them. Certainly in the pandemic, those things have changed, and until July 31st of this year, all taxpayers are eligible for an additional $600 a week in federal unemployment benefits. So that's something that everybody should be aware of and be taking advantage of. But it's a unique set of circumstances that the self-employed, unemployed, or underemployed face. And I'll give you an example. Most real estate brokers are self-employed. And very few real estate brokers that I work with don't earn a net income from their real estate practice. So when they look at everything that came in and everything that went out, what's left is usually a positive number. So they usually have a positive profit at the end of the year on their real estate practice. And that's a critical component if you're self-employed or underemployed and want to apply for unemployment insurance. Because if that number is a negative, if you have a loss at the end of the year, 2019, then you're probably not going to be eligible for unemployment insurance, because the unemployment insurance is based on your 2019 profit, essentially divided by 52.
Well, that's interesting.
Didn't know that? That's interesting. Yeah. Okay.
They, as a self-employed person, the way that the government has structured this is your income from self-employment becomes the equivalent of the wage for a worker who works for an employer. So if your profit from your real estate practice is $52,000 a year, divide that by 52, that's approximately $1,000 a week. Well, your benefit will vary, but your state unemployment and your federal unemployment would be based on a factor multiplied times your net income from self-employment. And it's when you're working through this, you need to be patient, you need to be persistent, and you need to be diligent, because it's highly likely, if you're working with somebody either in the unemployment department, either on the phone or in person, probably less likely in person with the pandemic, they may not know how to do this. They may not understand it. You need to understand it, and you need to be willing to fight for your eligibility, because unemployment can be up to 39 weeks. But if you start the process, even if if you don't get paid for your benefits right away, they can be paid retroactively. So you could get a significant benefit if you are patient, persistent, and diligent. And I guess I should add detail-oriented to that conversation. You need to be your own best advocate. It's really important, particularly when you're dealing with government employees who are great and are working tremendously hard in very difficult environments now, but they don't necessarily have familiarity with these programs, because remember, they're state employees, and so they don't really necessarily understand the concept of self-employment.
Yeah. As amazing as that sounds, but you're absolutely true. What do you think the biggest thing is going to be, Glenn, for people now? When we're almost halfway through 2020, and there's so much uncertainty out there. What are the things that people should kind of mostly be aware of, you think, the last half of the year in terms of getting ready for their taxes if they want to buy something?
Well, that's a good question.
What do you think?
Okay, well, first I need to say something that may not be, welcomed by all of your listeners, but that is that this pandemic is not over. And we have a tendency, when there's a few days of good news, to get complacent about protecting ourselves and our families and our coworkers. So I encourage people to social distance and wear face coverings when they're out in public. California just mandated it. Washington just mandated it. And the writing's on the wall, because Oregon's been on the list of states where the number of cases have been increasing. So take care of yourselves and don't slacken on protecting yourselves and your families. I think the most important thing that your listeners need to do in terms of their taxes, and I'm saying this in light of the number of surprising things that I've said that have been surprising to the two of you who are both bright, hardworking people, is to take stock. There's the potential for a lot of money flowing into your bank accounts from sources that you haven't been familiar with getting money from. The SBA, the PPP loan program, the unemployment department, and you need to be able to take stock and look at which portions of that may be subject to tax. And most importantly, how do they all work together? It's really hard predicting what your tax liability is when you're a gig worker who is getting unemployment, you're a small business owner and you're getting a PPP loan, you have a spouse who's a wage earner, and none of those sources know where all that other money is coming from. And the only time it's all going to come together is either by you forcing the issue and figuring out today or sometime soon what the impact is, or when you file your tax return. And I don't think you want the surprise when you file your tax return next year. And I encourage you to take stock of these changes in your circumstances and try to get some, and consider getting some help to evaluate what the impact is going to be.
Yeah.
And this is a good time to do it too.
Yeah. Alice, one of the best things about Glenn is that he I don't know how you keep updated and know what's going on and all the changes in the last few years, from the big tax changes, that took place after Trump got elected, and now this has hit your industry. My goodness, I don't know how you keep up with it all, but somehow you do, and it's really appreciated by all of that. So, it's going to be quite a year. Think of how many people are going to have less income from this year than they've had in the past. And businesses and all this. It's going to be, it's going to all fall on you, my friend, to figure it all out for us come next year.
Yeah, but I'd like to take this opportunity, Pete, to thank you for your kind words and your business over the years. But my colleagues in this industry, my colleagues in my firm, and I are ready, willing, and able to help. But if our clients and your listeners wait until January 15th of 2021, the ship will have sailed.
So keep that in mind, folks. We're out of time. Great show. Thank you, Glenn Cunningham. Thank you, Pete Belcastro. Make it a fabulous Southern Oregon weekend, and we will see you next week at 10 o'clock. Have a great day, folks.